Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about a Roth IRA account and pretty much how you guys can retire with millions of dollars and not have to pay any taxes on it. So I hope you guys enjoy it, and if you guys get anything in value, hit that like button and subscribe. If you guys want to learn more about investing in the stock market, go ahead and check out my course. And right now we're running a special and you guys can use promo code dividends to get 50% off the course. So at least check it out. So now guys, let's jump into it, roll that intro, let's go. Bam! So now, what is a Roth IRA account? Well, a Roth IRA account is just an individual retirement account. And yes, there is two IRA accounts. There's a traditional IRA account and a Roth IRA account. Well, the difference between the two is a traditional IRA account, you pay the taxes when you retire, and with a Roth IRA account, you pay the taxes when you're a lot younger and you don't even have to worry about it. So I think a Roth IRA account, in my opinion, is way better. And with this account, there's so many tax incentives, so there is deposit limits. You guys can only deposit $6,000 per year, but if you're over the age of 50, you can deposit $7,000 a year because retirement's coming soon, so invest your money hard. Now, just because you guys have a Roth IRA account does not mean you're gonna be making a ton of money. The reason why is because you pick and choose all your investments, which could be a good thing or a bad thing. But honestly, don't worry, because we're gonna be breaking down pretty much everything you need to know. Really, the next step is picking a broker that kind of meets your goals. Now, me personally, I use M1 Finance, but you guys can still use TD Ameritrade, Ally, and multiple other IRA brokers out there. Just make sure it's a Roth IRA account. Just so you guys know, FYI, Robinhood is not a IRA account. That is a taxable broker's account because you guys are going to be getting taxed on it every year on your dividends and your profits. So make sure you guys understand that. So now after you guys pick and chose the best broker, the next step is picking your investments. Don't worry, it's very, very simple. Me personally, I think it's very, very smart to honestly just invest in the S&P 500. So now the reason why I say this is because the S&P 500 gets on average a 9.8% return every single year. So over the past 90 years, through all the depressions, through all the recessions, through all the bull markets and bear markets, it's had an annual return of 9.8%. So pretty much if you guys play the long game and don't care about all this volatility in the market, you guys are gonna be fine. But let's go ahead and look at my portfolio so you guys can kind of see what I'm investing in. Alrighty guys, so we are on my Roth IRA account. And you guys can see, look at my investments. I am only investing in index funds and ETFs. Now the reason why is because these are very, very diversified, low risk, high reward plays for the long term, because picking and choosing different stocks are extremely hard. And if you guys are picking and choosing different stocks for the long term, just understand that this carries a lot more risk. So I'm only investing, I think, $20 per week. I'm going to be amping that up here in 2021. That's one of my goals. But let's look at my investments here. So now I'm invested in Vanguard Total Bond Market ETF. So right here, this is something that in my account, I get a dividend yield of 2.2%, a super low expense ratio, and this kind of acts as my defense in my portfolio because this will limit out the swings because yes, this doesn't really move a whole lot. You know, it's only up 83 cents, and honestly, look at the 1 year in the first quarter. So look at the 1 week. You guys can see that it hasn't really moved, just very, very slow growth. This gets around a 5% return every year, so it's not as large as like the S&P 500, but it's still good growth. So now let's go ahead and look at some other investment. So now here I'm invested in Vanguard Total Stock Market ETF. You guys can see that this one moves a little more than the bond market. I get around a 1.4% dividend, and on top of it, it's a lower expense ratio. So this is actually a very, very more risky investment, but still carries a lot of long-term potential. And this is diversified over like hundreds of different stocks. So I'm still diversified. So if some of those stocks go down, I'll be kind of balanced out, which is really, really good. And on top of it, this is all long-term. So just the rate of the total stock market has gone up. This is what this will track here, which is really, really cool here. The next one here is QQQ Trust here. This is a tech ETF. Me personally, I think that we are just getting started on tech. So this is a little more of a risky investment, and I completely understand it. The downside of this is it's a lower dividend yield, but the plus side of this is this moves a lot more. So the return of this is actually outperforming all of the indexes, Dow Jones, the NASDAQ, and the S&P 500. So that's really good too. But now moving on here, we have VUG. This is Vanguard growth ETF. So you get the growth of different stocks in it, and you get a little dividend, which is really important here. Moving on here, we have another one here. We have VU, which is just the top 500 companies. This will track the S&P 500. Now moving on to the last and final one here, we have SPY, which is just another S&P 500 ETF index. The biggest thing with all my investments, did you guys notice something? Low expense ratios, dividends, diversification. You guys can't beat that, especially for the long term. If you guys play the long-term game, you guys will be fine, I promise. Just understand, as the stock market falls, use that fall as an opportunity to invest, double your investment. So now that you guys kind of see what I'm investing in, guys, let's do some crazy math. And really, I want to teach you guys why you guys should start investing as young as you can, because the biggest thing you have that most people don't have is time. So let me show you guys something real quick. So now right now we are on nerdwallet.com. We are on a Roth IRA calculator because I wanted to show you guys how important it is to start off when you're young and why you guys should use a Roth IRA or at least a traditional IRA account, because there's so many tax incentives. You guys should be maxing these out. So if let's say you guys max this out with $6,000 or around $200 per month, I feel like we can all figure out a way. And if that's say you say, Carter, I don't want to retire when I am 67. I want to retire when I'm 60. Don't worry. Okay, don't worry. All right, if that's say you guys just invest in the S&P 500, which gets a 9.8% return, we'll put that in. Right now, you have that retirement at $1.6 million. But if that's say you say, Carter, I want to wait until I'm 67, $3.2 million. And here's the thing, based on my age of 21, we're looking at 12.3. And here's the thing, if you guys are 18, we are looking at $16.3 million. So make sure you guys can save and invest as young as you can. One of my biggest regrets is not opening up a Roth IRA account and investing as much as I can. And the thing is you guys will save $6.2 million when you retire because of this Roth IRA account. Oh my. So really, guys, that is it. I hope you guys enjoyed the episode, and if you did, hit that like button and subscribe to the channel. If you guys have any questions, go ahead and ask them in the comments. But the biggest thing, start young, invest in the market, and you guys will be fine. You guys have time. Just make sure you guys reinvest all your dividends, and make sure it's a Roth IRA account. You guys will be good. Don't worry, I promise. Take care.